All right, everyone, I'm going to do an end of the market wrap today. Few things technically I see, and so I want to point those out so everyone's prepared for tomorrow. If you're new to the channel, welcome. I cover stock market technical analysis, and for the most part, I look for opportunities that haven't happened yet. I don't just point out a stock and say, look, this thing's gone up 200%. Buy this one. That's really not how this channel's about. What this channel's about. It's really looking for, really the kind of the smart money areas of buying. Basically, we're buying and shorting stocks that haven't made the move that they're expected to make yet, and so that's really my trading style. Let's get right into it. Here's your market analysis. Triple Qs here. All right, so I drew another line right up here at the top, 282.40. That's really the top of this range. We hit it right back here previously. We hit it again the other day, and then today we hit it again. So I marked that out, and then we have this kind of pivot zone right here at 280.61. So we're kind of right in between there. Really just closed right up towards the upper end of the range. This is where resistance is at. So this is where you would look for basically a failure or a breakdown in price, which is what should happen. That's the higher probability trade. But there's also the potential for a breakout. All right, we haven't got the breakout yet, but you'll know it when you see it. It should be impulsive. Maybe a gap and go. That might be something that usually happens where we'll wake up in the morning, we'll have a gap up, and then it'll just run right at the open. You'll just see it start to run and that's basically shorts covering and buyers piling in. So look for something like that. That would be a breakout, kind of a confirmed breakout. Look for volume and look for impulsive price action. I'm not saying that's going to happen. I am still short triple Q XLK. I actually switched my short over to triple Qs from XLK. My broker wasn't able to, just over the last couple weeks, my broker wasn't able to locate shares short. So that was something that was, that's why I took an XLK short. But triple Qs is pretty liquid, so I like that. Now we're at resistance, so I think we're going to break down. We're at the top of the range at resistance. You short at resistance. If that goes against you, cover, but look for, I'll be covering, but I'll look for an impulsive breakout, not just something that is, not impulsive. Now, if they gap it up, let's say they gap it up tomorrow morning. If it could just sell right off and come right back down, and that would be your false breakout or your bull trap, basically. So anything can happen, but those are some scenarios to watch for. SPY. Same deal. SPY kind of closed right here above the top of the range. But this is what it looked like the other day when triple Qs was closing right above the top of the range. This is a breakout of this range in SPY, but it's not impulsive. And this is exactly what triple Qs was doing the other day, where they gapped it up and it just barely crept up all day. And then the next day it gapped down and sold off pretty hard. So that's what I think it's going to do tomorrow. I think SPY gaps down and sells off. The reason why is that this is just not an impulsive breakout. There's no volume here. Look at the daily here. You've got no volume, just really low volume and just barely breaking above the previous range highs. So not a way that you want to see something break out. Also, if you look at the hourly, we've got negative divergence right here. So we're breaking out on negative divergence, which means this is a divergent high. And divergent highs have a high probability of failure. Those are the areas I like to add shorts or build short positions into divergent highs or break of major trends. So that I think it's going to fail, but again, we got to see what tomorrow brings. Tech is going to probably be, we'll let tech without tech. If you don't see a breakout in tech, the SPY is not going very far. Here's XLV. I covered my short little position on this. I didn't have a big position. I just took a little bit, but I didn't like the price action today and the close. So it could be a fake out. There is negative divergence, but I had such a small position, and I just took it the other day, right around this 106 area. So it was barely down, and I just I've got a lot of short positions on right now, so I wanted to just the things that don't look the best. I don't want to have to manage them. And with shorting, you do have to manage a little bit more intensively because things fall so fast. They'll fall right down to your level, and you got to be ready to cover and take your profit pretty quickly. So that is one of the nature of shorting is, shorting is more of an active trading or swing trading tool, where long, this isn't investing. This is trading. So when you're shorting, you're looking for moves, down. It could be a great stock. It's just overpriced. And so, we're looking for opportunities to profit on that imbalance of price. Okay, someone pointed out Zynga, and I like this one for a short. Here's what I got. They pointed out that it was breaking down today, and it clearly did. Broke down on the hourly chart. By the time they pointed it out, the move was already, it already made the move. So ideally, you get a back test, and that's the area that you could short at or enter if it does that. Otherwise, this one's already started. Made a pretty good sized breakdown today. You can see from the high to the low down 3%. So maybe it comes down and fills this little gap right here at 9.15. And then we rally up and get a big back test, and that might be the area. Otherwise, we just move on. Okay, anybody who's interested in some long ideas, this is XOM. I jumped on this one. Another subscriber asked me to do an analysis on this one, and I hadn't looked at it up until then. And when I looked at it, I noticed that it had a breakout today, so I jumped on it long as quickly as possible. I missed a big bulk of the move today. I got it up around this flagging action right here because I had missed that first impulsive breakout. But again, that's the first hourly close. So you can wait. A lot of the time when you have a breakout, you do want to wait for that first hour to close to confirm that breakout. And it did confirm. So we've got a breakout in XOM. Here's your downward channel right here on the hourly chart. Nice, clean downward channel. And you were waiting for a breakout. Now, on the indicators down here, you can see on the RSI we have bullish divergence, positive divergence basically. So you can see we made a low peak right here, which was this price action low, and then we made a new lower low right here, and that was a higher low on the RSI. So that created the bullish divergence, telling you that a momentum change is coming soon, and then you just needed the breakout to, for the buy signal or the trigger. When you have a divergence in the RSI, that's not enough to say, okay, I'm going to enter the trade right here, because it can continue to diverge, over and over. You want to wait for a signal or a trigger that says, okay, now it's turning. So this is your breakout right here. We broke out from the channel. First resistance I see is right about here at 35.89. We didn't have a lot of reactions there, but you can see we came down, tagged it as support. When it broke, came back and tagged it as resistance. So I think we're going to run up and tag that 35.89, probably get a reaction around there. But again, this is a breakout. If you look at the daily, same kind of deal. We had slight bullish divergence on the daily. It's there on the hourly, starting to break out. So I would say, 35.89. I think this is probably good for, really, I would think a back test up to this 41. That's what I'm looking for, because you can see that was a real level of support for quite a while. You can see we tagged it here, tagged it here, tagged it here. Then it finally broke. As I zoom into that level, kind of hyper focus on it, you can see this candle right here, we tagged it as resistance, and it rejected and then sold off. So a move back up to tag it and do another test of that level is I think a realistic trade. So it's kind of what I'm targeting. It's about 40, 80, 41, somewhere right in there. And from where we're at now, that is a move of about 16%. So looking for that. Okay, a higher risk entry on a short side for PHM, but it looked good to me. I started adding to my short position today. You can see what was going on. All right, so we have on the hourly chart negative divergence here on the hourly. If you go to the daily, nice clean negative divergence here on the daily where we're making higher prices on lower and lower momentum. That tells you that this momentum is fading and that the price is about to change. So if to the downside basically. And if you look at the hourly, we just kept popping right up into the resistance, and I just kept adding, positions, started, buying, adding to my short position as we popped right up there. We did it kind of twice today. I added on this little spike a little bit, and then we spiked up again, and I added another little bit amount. And so almost have a full position in this thing. Don't quite have it, but I'm close, So, if we get a few more little spikes, I'll add. Or I might just wait now for a break of this what I'm calling a bear, what this looks like a bearish rising wedge. So bearish rising wedge, negative divergence. We've been back testing. And also the bigger pattern is big trend line resistance here on the daily going all the way back to April. You can see we were just walking up this support line, this trend line, and we broke. So we broke it right here. And all we've been doing is just kind of trading and back testing from underneath for quite a while now. So this is all broke. We've broken the major support. We're doing a series of back tests. We've got negative divergence. Everything looks good. So I'm going to continue to monitor this one, but it looks good for a move down. And where's the target? Well, we've got, I think this gap is a really clean target at 39.53. See this open gap here from way back? I think a move down there over time, I'll have to narrow it down to find where we're likely to get some reactions on our way down. But I think kind of the trend or a swing trade would be down to this 39. It's about 39. My line's a little off. It's really about $40. We'll just call it $40. All right, Carvana. This continues to work. You can see more selling today, and these when you see these divergences and you're starting to build positions way up here, and then it starts to work out. You've got a really low risk trade. So that's kind of the key here is to get into the trade and get positioned at the appropriate time to keep your risk extremely small. If you start shorting after a big move down, then the possibility of it being overextended and then moving against you sharply is a lot higher. So Carvana continues to work its way down towards 170. We'll call it 174, and that's what I'm planning. That's what I'm looking for. This OSTK Overstock, here's your resistance line right there at 85. You can see 85 was a clean support right here. We popped up, came back down, held it again right here, and you get the reaction. So right when you hit support, you get a nice impulsive bounce off of that. But then it broke, and it broke on a nice impulsive breakdown. And ever since, that's been resistance. So it was resistance here. It was, we didn't quite get there right there. They stepped in early and sold. And then again right here. So this was a bull trap. They popped it up over it, and it failed and closed all the way down here. So again, resistance. To me, as of right now, it looks like we're heading down to support at 63, 86. So I'm not in this one. This one I wouldn't want to be short unless I had a good position entry up here closer to the resistance line of about $85, but I just want to point it out. And this is a big range as well, so position sizing I think is appropriate. You don't want to just load up on something. This range is a 25% range. It's important to kind of monitor how your position size is according to what stock it is. If it's a really volatile wide range stock, you don't want to just load up on it. Yeah, you can make a ton of money. You can also lose a lot of money. Trading is about survival, and it's about staying power. So you want to, it only, if you load up, it only takes that one time you're wrong to really wipe you out. And everybody is wrong. I mean, professionals are only, maybe right 70% of the time, but they don't have to be right every time because of position sizing and money management. DraftKings just continues to work, down 4% today. So, I've been talking about this one for a while, just pointing out, looked like a good short. I'm short this, and really from the highs here, it's down 20% already. So I'm thinking we're going to get a reaction around this 49 level. What I'm thinking is maybe tomorrow we gap down and open up right around support. So I'm going to watch for that, and if that's the case, I'll look to probably cover, let this thing have some sort of a bounce, and then recycle back in after the bounce. So it looks like it's going to gap down right at support. If you're not short this thing already, it's not a good area to short. You wanted to short back when I was talking about it, a couple weeks ago. Now it's already made a big part of the move. But again, you can learn lessons from what how I'm pointing out these negative divergences. You can see the negative divergence was completely in play here, and you can see the price. We were making higher prices as we continue to diverge in the momentum, and then you get the big, the follow through. All right, Tesla. All right, Tesla, I think it's going down, and here's one of the things. Today, we pretty much went absolutely nowhere. You can see we closed right there. It was up higher throughout the day, but they just sold it all day long, and it closed just barely above where it closed yesterday. And so that's pretty weak. That's weak price action. It had the opportunity to gap up and run higher, and the sellers came out and sold it. So I think this thing's going lower. If I look at the daily here, we have a big negative divergence right there. It is intact. And also, going way back here, I mean, this continues to diverge in like a much larger divergent pattern. But these large patterns, they take a while to potentially play out. So I'm watching this, but again, today's price action was not. You can see it they sold it down and it closed right where it was at. So we'll see what tomorrow brings. Okay, we'll wrap up with Roku. Someone asked me to look at this one. And I already had this trend line here drawn, which still looks like it's intact. So, I mean, in general, let me just take a quick look. So we have an uptrend line in Roku. That trend has not been broken. It is still intact on the hourly. On the daily. Here's your hourly uptrend line here on the hourly, still intact. I don't see any negative divergence on the hourly. And I don't see any negative divergence on the daily. So it's uptrending. That's all I can see. I don't know when it's going to end. It's at all-time highs, it looks like. So it's going up. There's nothing bearish telling me it's going to end anytime soon. So what we look for is, now you can, if you're long, just trail stops is what I would probably say. And if you're, there's no reason to be short right now, but the thing you want to look for is doji candles, reversals, indications of a reversal. I don't see anything right now. And break in trend, I'd start with, you want to see a reversal candle and then probably start to see if this hourly breaks, then that's going to most likely set this thing in motion down to the major trend line. And then if that breaks, then, then we start, it's going to go lower. But for now, bullish. So I'm going to wrap up there. I appreciate it. Thanks, everyone. If you find value, leave me a thumbs up, and I'll catch you guys on the next one.